Hello everyone and welcome into the channel. My name is Brent with Investing on the Go, and today we're going to cover a step-by-step process of selling out of SCHD and my individual stocks inside of my Roth IRA to reinvest into VOO. So if you guys are brand new here to the channel, definitely go down below, hit that subscribe button, also hit that thumbs up, make it green or gray, whatever it does these days. And then also check out the links below for other investing insights. And with that said, let's go ahead and get into some of the video here. Okay, so really quickly, about 13 hours of posted ago, yesterday, Thursday, the S&P tumbled, pushing the S&P 500 down below 10% into correction territory. From top to bottom, the S&P 500 had actually fallen into the 10% range. Wednesday, I was expecting that breath, that bounce, just kind of a little bit of trend. Thursday, I was looking forward to having it either at 0% or basically kind of just flattening out period. So as of Wednesday, we've been kind of bouncing within this range, not kind of almost finding a bottom. I did expect here on Friday, 7 hours ago, I posted that the last 2 weeks on Wednesdays and Fridays have generally been a bit of a breath in the market, relieving some of the downside pressure. And that is looking to be staying true. So Friday, I was expecting a green day with an average return of around 1.5%. But next week is going to be the big indicator whether this market kind of finds its support, its bottoming out point, and stays trending either sideways. Doesn't make a full recovery, right? Because there's quite a bit of uncertainty, but at least finds some sort of support at this level. But if it doesn't, that could mean that the market could continue to fall back into correction territory. And even further, others are expecting around a 20% downturn if there's more uncertainty and other negative news out there in the market. So here we can quickly see the S&P 500 is up 1.79, the Dow Jones up 1.36, and the Nasdaq up 2.3%. That Nasdaq is being pushed higher by the tech companies. You can see Meta up a nice 2.6%, Tesla up 2.81, Nvidia out there doing 4.32, Microsoft, as well as all the others here. Just a lot of green in the market. And that was expected on this Friday. They kind of ease up off those negatives that started off so brutal on Monday. Okay, so now that we're kind of covered the intraday and what I kind of expect for, what I want to see next week, let's go ahead and dive into the next topic is why am I consolidating SCHD and my individual stocks into VOO? Okay, so this is all within a Roth IRA. So some of the Roth IRA benefits that I'm taking advantage here is that there's no capital gains tax, meaning that it's perfect for long-term shifts. In the portfolio, SCHD overall is up roughly 22% since I purchased it. And if I were to sell this off in a taxable account, I would have to pay capital gains tax on the market gains, the dividends that this position has, this position has earned in that time frame, at least the capital gains. But in this case, I could just take advantage of this market, the money weighted return of this position, and then transition that capital to VOO, which is down more than SCHD right now. If we take a look at SCHD over the last 1 month period, it is down 1.22% for the month. Whereas if we take a look at VOO on that same time frame, it's down 8% in that same month time frame. So I'm able to transition from something that hasn't moved as much down to the negative as SCHD has, as VOO has, and I'm able to transition it now, taking advantage of locking in those capital gains without having to pay any sort of capital gains tax. And while SCHD has been focused more on dividends, VOO is able to capture some dividends, has a lower ratio here of yield. The yield here on SCHD is at a 3.49 versus VOO, which is at a 1.23. So it's essentially cutting that dividend in half, but there's more growth upside potential in the future, which is what I'm trying to aim for with the Roth IRA at this moment. So shifting from dividends to long-term growth stocks in a Roth IRA can optimize that compounding effect that I'm looking for. Yeah, there were other suggestions as well, but we can see here that the expense ratio on SCHD is at 0.06. Some other ones that people consider investing in are SPY. SPY has a 0.09, which also tracks and monitors the S&P 500. Now, generally, I have invested in SPY in the past, but this was in a taxable account where I had more liquid capital in it that I was able to buy and sell options within that account. Over on M1 Finance, I don't have the option to use options, and I don't have the capital in there to consolidate 100 shares of SPY at a time. Maybe, I don't remember, but um, so I don't want to invest into SPY. It has a higher expense ratio. It has I don't need it for options. I did want to bring this one up as well, kind of showcasing the year-to-date trends of SCHD versus VTI versus SPY versus VOO. So here we can see year-to-date, while they all started off on similar performance here, the S&P 500, VTI, and VOO have all trended negative. These three ETFs all essentially kind of have, in the short term, very similar market movement. But if we look at them over the long term, which is, I wanted to transition from SCHD, which is very focused on dividends, not as much growth to the upside, and transition it over to VOO, which captures more of that growth upside potential in the future, especially after this downturn, right? We can see here over the past 3 years, SCHD has returned 9.2% versus the VOO, VTI, and SPY have all returned between 30 to 33%. Now, if we do our dividends reinvested, so total return should be, I may already have it down here. Let me go quick. Total return. Nope, doesn't show it in there. I don't know why it doesn't pop it in there. Total return value is what I was kind of looking for here. Okay, that's what dividends reinvested. Okay, so pretty sure this one's going to show our total return level, which is with dividends reinvested. So even with dividends being reinvested, SCHD in that 3-year time frame would have returned 20.52. The other ones now have bumped up from not only 30 to 33%, but 33 to 37% with dividends reinvested. Take a look at that 5-year chart. We can see it's a little bit more grouped up, but still the SPY, VOO, VTI still outperform SCHD over the past 5 years. And that's just kind of continue to trend higher as, tech companies potentially take and grow VOO, VTI, and SPY more out in the future. Okay, so that covers why I'm consolidating from SCHD into the individual stocks. So now jumping over into M1 Finance, what we're going to go ahead here is sell out of SCHD and individual stocks and then move into VOO. Okay, so for this, we're going to go back to our main portfolio. If you guys are brand new to M1 Finance, then this will look a little bit different than what your normal broker is. I think M1 Finance looks a lot different than some of the other platforms that I use, Fidelity, Schwab, Merrill Edge, Robinhood, right? Every platform is a little bit different. I do like that their page is just very clean. But so what we're going to do here is select edit. This is going to allow us to remove and put new positions into our portfolio or add a slice is what we're going to be doing. So I'm going to go ahead and go in here and add a slice, which will be VOO. And I'm going to go ahead and add it into my basket and add it directly into my portfolio. Okay, at this point, you can see here, I can go ahead and select this. And what I'm going to do is I'm going to go through here and remove everything. By doing this and deleting these out of my portfolio and setting Vanguard's S&P 500 VOO to 100% and saving it, on the next trade window, it's going to confirm what's going to happen. It's going to remove all of these positions out of my account. It's going to remove Avi. Oh, let's quickly. Oh, I can do that here in just a minute. It's not going to do it. It may not do it right now. Hold on. So before I do this, we kind of talked about locking in our capital gains, and this is within a Roth IRA. So there's no capital gains tax. It's perfect for those long-term shifts. So here's where the individual companies have grown, and where's that appreciation coming from? Apple's up 345% since purchasing it back a bit ago. Main Street 243, AbbVie 238, Essex Property Trust 61%, Waste Management 55, AbbVie 45, Realty Income 24, and then Schwab up 21% in the time frame that I purchased it. So there's a lot of green there, right? If I was doing this within a taxable account, I would have to pay capital gains tax on these positions as I'm selling it out. But because it's not in a, because it's in a Roth IRA, I don't have to do that. So again, we're just going back to the motions here of adding to our pie. I'm going to add VOO. I'm going to go add it to my basket, hit add, go through here, remove essentially all but VOO, delete the others, set this to 100%. Save this. It's going to confirm the changes that I'm removing these from my portfolio. Removed slices will be sold during the next trade window. My next trade window is at 12 p.m. Pacific time, so that's in about 2 hours. So proceeds will be reinvested into the pie. So the updated pie is VOO at 100%. Added and target changes require a deposit or rebalance of the pie to be funded. So essentially, it's going to sell out everything. It's going to rebalance itself, and it's going to deposit all those funds directly into VOO. And then I hit OK. And here, now we can see what's going to happen here. The removed slices are shown below. The new slices are shown above. There's no return or loss on VOO right now because it's just going to be a new one. And while the portfolio will still show a money weighted return overall, the actual individual holdings will, they'll be kind of removed, and the kind of growth recapture will be restarted again. Okay, so we went ahead and bought VOO within the M1 Finance pie for the future allocation. We kind of discussed already why I'm deciding to purchase VOO with the expense ratio of 0.03 versus the SPY with the expense ratio of 0.09. They both share the very similar, both similar capital appreciation, but with the lower expense ratio on VOO, and me not taking advantage of options, it just makes more sense to go with VOO versus SPY. So I think that is it. We kind of covered why I chose VOO over SCHD, VTI, and SPY. If you guys thought that this video was helpful for you guys, are you guys also doing some consolidation during this downturn? Let me know down in the comment section below. I would really appreciate it. Also, quick reminder, quick little notification. M1 Finance doesn't have the best referral. So right now, if you guys are looking for $25 of stock offer, you guys can get either started with your investment journey or just open up a new brokerage. Over with SoFi, it's offering $25 of free stock. All you have to do is fund your stock SoFi Active Investment account with $25, and boom, you get another $25. Essentially, getting $50 to start up your investing journey over on SoFi. So definitely check out that offer, which will be pinned in the comment section down below. Okay, with that said, I'm really hoping to see that this market ends up recovering a bit or trending sideways. Look at this, SPY's already up 2% on the day, which is very nice. Okay, it's already over the average of 1.5%. So I'm going to be pretty excited here towards the end of the day. We'll see how it ends up. I hope everyone has a really good weekend. Looking forward to the weekend. It's kind of rainy here. And I will see you guys in the next video. Bye-bye.